I am Ashley. I am the co-founder and CEO of Ladies Get Paid. We are so happy to have everyone here for our 6th Get Money, Get Paid conference, 2nd virtual. We love this new world that we live in today. Here's our session with our presenting sponsor, eToro. We are so happy to finally make this collab happen because we love women and making money, and eToro loves investing in women, and that's why we get along. So we have an amazing team of women here who are going to talk to you about all things crypto. I know you've read a lot of headlines lately about the crypto crash and all different ranges of things. I'm sure you are very confused, but extremely interested in, because we have open minds here and we love new opportunities for women. So these 3 incredible women are going to be talking to you about investing as a woman, about the market, about careers in crypto, and everything about how you can get involved in what I think is one of the most exciting technological innovations in the last few decades. So I will not waste any more time from these 3 amazing women who are going to kick us off with our big crypto talk. So ladies, take it away. Thank you again so much to eToro for their support. I'm gonna hop off and I will be listening intently.
Thanks so much, Ashley. Can you guys hear us all? We're good? Okay, so thanks again. So what we thought we would do is, good afternoon, everybody. My name is Lule Demmissie. We thought we'd just give you a little bit of bio about ourselves. And instead of just being talking heads, I asked Anna and Callie, who are some of our big brains at eToro, if I could ask them questions. So I'm going to be channeling you because they're 2 of the smartest women I know in this, both in the crypto space and in the investing space at large. And so it's going to be a fun time for me to figure this out. And then, I'll try to get to the questions on the side a little bit, the second half of the session. So when you have questions, pop in there about 15 minutes earlier, and I'll try to look on the other side and see how to make sure I pose those questions to these 2 ladies. So with that, Anna and Callie, why don't you do a quick bio about yourselves? And then I'll introduce myself. Let me introduce myself quickly. So I'm Lule Demmissie. I am the US CEO of eToro in the US, and eToro is a social investing platform that offers both the ability to invest in stocks with fractional shares, 0 commission, a social feed that you can learn from other investors like yourselves, the ability to practice without putting a dime into our platform when it comes to investing, as well as a variety of crypto coins that an investor could learn about, track, and invest in as well. So we are going to continue to grow at eToro, making investing accessible to people. That's our shtick. As a person of who I look like and who I am and my bio, it's really important for me that investing is continuously accessible to people. I've spent my career in Wall Street, but I'm really excited to be coming to this other side of innovation as well. And as an immigrant, it's really important for me that, people get to have the status quo constantly broken so that they can actually have access to this stuff. So super excited to be part of the eToro mission and to join you for today. So let's kick it off to Anna. Anna, tell them a little about yourself.
Hi, everyone. Ladies Get Paid. Thank you, Lule. Thank you, everyone. I've been a big fan of this community since I stumbled upon them about a year ago. And as a woman who's been working in this space, both at the intersection of crypto and investing, and of course, trying to build my own personal and professional profile, I've always been a big fan of this community. So I'm just psyched to be here with all of you today. My background to getting here is I actually started my career really interested in low-income consumer finance. So I was always passionate about how do we take the financial services that we rely on, our credit cards, our bank accounts, our ability to use Venmo. And at this point, this was in 2010 or 2011, but how do we actually bring those financial services to the 5.5 billion underbanked people around the world, not to even mention the 1.7 billion fully unbanked people around the world who are totally unserved by financial services. started my career in nonprofits, attacking it from that angle, trying to reach people in community, spent most of my career, my technology career, actually in B2B, but also in big data. So I love to work at the intersection of complex technologies and things that don't yet exist. I've been working in Ethereum and crypto since 2018, specifically building projects in decentralized finance, which is an area that we'll discuss a bit more, which I fully believe is the infrastructure layer that is the future of building better, more inclusive, more accessible financial services for everyone in the world who has a cell phone. And at eToro, I work on a range of our different Web3 initiatives, including a bunch of social impact projects, NFTs, looking at how we bring retail investors into not just being crypto traders, but actually crypto users as we prepare for the new world, if you will. So it's just a pleasure to be here and looking forward to our conversation today.
Thank you, Anna. Callie, tell the people a little bit about your bad self.
Oh, hi people. Hi. I'm Callie Cox. I am the U.S. investment analyst here at eToro. And that's just a really complicated way of saying I think about money in the markets all the time, specifically traditional markets. But of course, I think about crypto too, because what's eToro known for, right? So I think a lot about money day after day. A little bit about my background. So I actually started off not on Wall Street, but as a journalist. I was a journalist at Bloomberg covering the stock and option markets. And I just got so enthralled by money, how money works, how it makes people act, how we think about money, that I dove a little bit deeper into it. I got into research. I started doing more research products for Bloomberg. And then I said, heck, I'll just jump into research. And now I focus on individual investors like you and me. I have a passion for them. I think about, my background as an investor and not really stepping outside of my retirement account to invest until the past 5 years or so. And I really want to, be here and help you all feel empowered to, step out and invest, because investing is key to building wealth. I think we can all agree on that, but it's also really difficult to get into it. And there's a lot of analysis paralysis and a lot of decisions you have to make. So I'm here to help you. I'm here to empathize with you as well, and also here to jam. So really excited about this.
Fantastic. So let's get started first. So what I would love to do with you guys today is first to talk about just a little bit of the demographics, right? So, but both from Callie, from your perspective in terms of market participation for capital markets, and Anna, from your perspective when it comes to the DeFi world, right? And the demographics for women, the demographic for any kind of new entrant to money, if you will, right? It's not just about women. And one of the things before you guys sort of give a little bit of the landscape of that demographic shift that I want to make as a commentary is, typically what we find in our conversations, at least in my conversations, is like, woe is us, women are underinvested. Woe is us, women are more conservative than men. Woe is us, people of color are not engaged. And all of those things are true. But the one thing we know about people's behavioral sort of brain neurological makeup is if everything is dark, nobody will wake up in the morning and make that incremental shift that we need to make in history. And that's all we can do in life, is to make the incremental shift so we leave it a little better than last. So what I want these ladies to tell you is, like, actually the story of the demographics is that it has been an incremental shift. And what we want to do today is talk about and celebrate that, but also see how else we can shift it even further, and not let these times, these volatile times, make people who are these new entrants shy and walk away. That is the worst thing that could happen. And so we want them to stick around, learn from the loss of the sting, learn from the environment, and then endure and get stronger for the next round. So with that, Callie, kick off first by giving us a little bit of the landscape of the demographic shifts when it comes to investing in capital markets.
Yeah, definitely. And I think it's appropriate that I'm going first, since traditional markets have existed for decades and decades and decades. But they haven't always been accessible, right? Decades ago, even in the 1960s, 1970s, investing was largely unacceptable. It was almost like a privilege for the wealthy, because you had to call up your broker, you had to pay a steep fee. Transacting or manually trading was a super slow process. So it just wasn't something that many people did. But luckily this thing called the internet came along. The government rolled out tax advantage retirement accounts, and society started learning about money, about the power of investing, and about how, just in general, investing became easier for just the general population, and cheaper as well. The internet came along, personal trading exploded in the late 1990s and early 2000s. And then it pulled back a little after the dot-com crisis, understandably. We all got a little jaded about the system, but, here we are again. COVID really started the conversation around money again after years and years of distrust. And I want to echo what Lule said about, we have seen a lot of progress here. Ages 18 to 34 investors, they according to a survey that we ran about 3 months ago, about 40% of them are in domestic stocks, or, US based stocks, the kind of thing you think about when you think about an investor, right? More of them are actually in crypto, but I don't want to steal Anna's fire there. So we're certainly getting there. The conversation around money is something I think about as a reason why, we're feeling more comfortable than ever to invest. And unfortunately, like, the reason why we talk about money a lot these days is because we have money worries. I mean, COVID was really tough on our psyche. I remember back when I was actually working with Lule at Ally before this. That's when COVID kind of kicked in, March 2020. And I remember thinking, like, oh, the market is selling off, and I don't know if I'm going to have a job in a month, because things were just changing so quickly. So there was just a lot of change back then, and a lot of angst around money. And it seemed like we all coped by talking about it. And that really helped us, in a weird way, find the confidence to step out there and, take charge of our money, feel empowered to open that brokerage account and start investing for our futures. And it didn't hurt that the market rebounded super quickly. It was actually the second quickest bear market rebound we've seen in history. So, after that, I got really passionate. It seemed like all my friends were asking me about how to invest, what this investing thing really means to people. And it really supercharged me in thinking about how I talk about money with myself and with others. We certainly have a far way to go. I'm not saying that we have all the problems solved here. That's part of the reason why Anna and Lule are here with me right now. But I'm really excited to dig more into this conversation and talk about, the thought process behind investing, how you think about money, how your emotions attach to money, and, how that's really impacted society as a whole. So Anna, tell us about crypto. I mean, that's the more exciting space right now, right?
So, I mean, I think if we zoom out, Callie, we start at a starting point where, in general, there are more people investing in crypto than ever before. Crypto is more accessible than it's ever been. It's never been easier for an individual, whether you're sitting in the US or whether you're in Venezuela, to begin to access crypto and begin to use crypto, whether it's as an investment asset or whether it's as you're really using cryptocurrency for peer-to-peer payments or using some of the decentralized finance tools that are available out there. So I think on the aggregate, even though billions of dollars of wealth over the past month have kind of like disappeared from the market, on the whole, we're around 12 years into this asset class. More and more people all around the world, all different sorts of people, hold crypto and are beginning to learn about crypto and beginning to use crypto every single day. I think that the figures are hard to get a hold on, but it's quoted that even in the United States, over 40 million Americans, around 10% of Americans, hold crypto assets. This is not a small number, particularly when you consider the number of people that are actually investors in capital markets, right? Which I think is estimated around 50%. You guys would know better than me, but that's not a small figure, right? So what it means is that slowly but surely, as an asset, people are beginning to buy crypto. And in my own experience, the only way to begin to really learn about crypto is to get skin in the game, right? It's actually to cross that chasm of, let's say, buying your first piece of Bitcoin or buying your first piece of Ethereum, because that's what we like to call having skin in the game, right? That's the moment when you really go from being kind of a passive observer, if you will, to actually being an active participant, and actually lights that spark within you, which is like, okay, I heard about Bitcoin. I didn't know what Bitcoin was. I bought some because my friend told me to, but now I'm actually going to start to read about it.
Yeah.
Right?
And I would say, just to add to Anna's point on the skin in the game, psychologists will tell you the scarier something is, the more important that learning by doing is a part of your muscle, right? So one of the things that's so exciting to me about eToro is like, you can actually learn by doing without putting $1 in first, right? Because we have the ability to practice on our platform, to track, and then put that skin in the game that Anna is talking about. And the learning by doing is so essential, because what it does is every time you do, you pierce through the veil of that fear that usually investing creates in people. So I just wanted to echo that sort of that sentiment that Anna is talking about.
And I think regarding the demographics, I mean, when I think of the first and foremost, probably unsurprisingly, crypto is dominated by younger people, right? We know that Gen Z is the most likely to invest in the asset class, followed by millennials, and everyone else kind of trickling off from there. And I mean, I think 32 billion millennials, or 2 billion members of Gen Z that are out there right now who are investors and more than investors, believers. They believe in this. So the demographics are there. Also, when we see just that in terms of the adoption is there. And I think when I look at the industry now versus even 2 years ago, one of the most important things that's happened is that Ladies Get Paid and other organizations like it have actually created the space that's designed to encourage the conversation to pierce through the veil of fear, and are designed to create, the supportive communities that enable women to talk about doing something scary, to talk about doing something risky, to talk about doing something that you don't feel comfortable with, to talk about doing something that, quite frankly, where you feel like you don't know what you're doing. I'm the first to admit that I felt that way a million times, right? So that's one thing from a demographic perspective I'm super encouraged by, is the creation of all of the different communities in the space that are focused on basically crossing this chasm between fear, getting started, and becoming empowered.
Yeah.
Yeah.
Go ahead, Callie.
Oh, I was going to throw into, something I always say is we work in this space and we're still figuring this thing out. I mean, that's just kind of the nature of investing, both in capital markets and crypto. So I just wanted to echo what Anna said too. I mean, I started investing outside of tossing money into my 401k like 5 years ago. And I still, especially now, feel like I'm still learning, and I have elements of, man, I don't know this thing at all. So it's kind of natural to feel that way. And I'm so glad that we have communities now to kind of remind ourselves that we're all kind of in the same boat here. Like, even the pros don't have it figured out. I think it's more obvious than ever now.
Yeah. And I'm always reminded of that Teddy Roosevelt quote about the man in the arena. I recommend everybody reads that. Plug in women if you want for generational adaptation. But it's so essential to have that sort of person in the arena mentality when it comes to investing. Again, that endurance is what makes you braver and smarter. And there's nothing wrong with hearing your inner fear. It's just more about making sure that it's context with knowledge, right? And so that's what we're going to shift our conversation to now, is navigating this time and giving you some context with these really smart ladies as to how it is that you can navigate this with context instead of fear. But before we do that, I want to just share one fun fact with you. 80% of household income, of household monies, is governed by women in the US. 80%. And yet we still, for the most part, remain the CFOs of the household instead of the chief investment officers of the household. And the chief investment officer holds a different power structure than the CFO. And so one of the things that's really going to be important is to know the strength from which we start, which is that most households, you're already in the money game. when you're a woman, but at the same time to change that mental framework, and that endurance around investing is one of those, to become more and more the chief investment household, whether it's your single home, double home, however many type of homes that you have, it's really important. The second thing I wanted to give you as a factoid is this. The 1974, full disclosure, the year of my birth, 1974 was the year that women were allowed to apply for a credit card. 1974, people. I'm a young woman, you know? That's crazy, right? To know that just such a short time ago, that we couldn't get the fundamental access in the US. And that's just in the US. You can imagine where places where they're still not able to do it, right? Fundamental access to the thing that is possible for the accumulation of wealth, right? Which is, one is capital and the other one is access to credit, right? And so we really need to celebrate, knowing full well that so many people made this possible for us, and we are standing on their shoulders, and no room for being weary. We got to do our part to make from 1974, what are we going to do in 2022 to change the chapter on CFO to CIO? And that's going to be the conversations that we're going to want to have more with you. So with that, I want to shift to context, because you know what? We're not Pollyannish around here, and we know that it's a little scary right now. So let's start with Callie first. How are you helping people with insight and context to navigate this time?
Yeah, well, as Lule knows, context is my love language. I am a data nerd. I got into this space mainly because I loved studying the way that markets worked in past crises, in past recessions, and past sell-offs, which is a little weird, I'll admit it, but, it got me here. I'm still fun. I don't know. But, context is so, so important when you're looking at the markets, because we all know that we're in a sell-off right now, a stock market sell-off, crypto sell-off, and it doesn't feel great at the moment. But, I want to throw out that this sell-off is both totally unique and totally normal. And what do I mean by that? Well, sell-offs happen both in the stock and crypto markets. Stock markets have a little bit more history, so we have a little bit more precedent to lean on here. But fun fact here, since 1950, we've seen 32 sell-offs of 10% or more in the S&P 500. 32. That's about once every 2 years. So I like to say that markets go up and down, and that's the natural rhythm of investing. And it's true. Knowing that is, an empowerment in itself, to know that it isn't going to be an easy journey if you're a long-term investor. If you're thinking of investing over decades and decades, you're probably going to run into these bumps every once in a while. That being said, it's still a really tough time to invest. I mean, I even feel it. And what we're going through feels very unprecedented. And I know you've heard that word a lot over the past 2 years, but I also want to add, this has been 2 years of mental angst that we've gone to, and we just kind of want it to be over. So, this sell-off is definitely unique in that it feels worse than before. We're dealing with a lot of change, more than before, and it can feel scary. But I just want to encourage you to, really think about where you are and, your why when you're investing. And the reason why I throw that out is because, every financial advisor will tell you to kind of know your why. And then they'll probably just say okay, there you go, pay the fee. But that statement is just so, so important. Knowing why you're investing, knowing when you need the money that you're investing, knowing how much swing or how much risk you can take while you're investing, and understanding why you invest in what you do is just so important when you frame and contextualize these sell-offs. It really defines what you're going to do next. And why? Because these sell-offs don't last forever. I mean, at least in the stock market, you got to think about the stock market fundamentally. It's equity in a bunch of U.S. companies. And U.S. companies, as an aggregate, tend to rise and fall with society, with profits too. But, back out a little bit further, and it's society's resilience through crises and through economic cycles. So if you view the stock market that way, as, sometimes as a society, we go through crises, companies have to deal with them, they have to pare back a little bit. but then we make it through. Innovation reigns, and we kind of get through that cycle stronger and better than ever. Then you can look at this current sell-off and say, this is probably temporary. It's been temporary up until now. So what can I do to capitalize on this right now so that I'm living my best moment in my investing journey? And I know that sounds really heady, but that story, the story of the stock market being a reflection of society, is kind of what gets me ahead and what keeps me optimistic in tough times like these.
Thank you for that wisdom. So Anna, give us a little context, because I mean, there is no doubt about it. People are feeling the fear of what's happening, especially recently in the crypto space. Give people a little context as to how to digest this moment we're in.
So, I mean, I think first and foremost, just to echo Callie's point, this is nothing remarkable in the big context of things, right? That markets are cyclical by nature. There are periods where everything goes up. There are periods where everything goes down. This happens to be a moment where things are going down, but that is a market, and there is something empowering in just acknowledging that, taking that perspective. Now, crypto is the functions of a market, but on steroids in terms of the level of volatility. And I think in terms of the level of the volatility and how dramatic, therefore, that makes the gains and the losses, right? But to give you guys a little bit of perspective, between 2011 to 2014, Bitcoin crashed every single year in a way where it lost 90% of its value. Okay, so since its very inception, Bitcoin has been, let's say, characterized by its volatility. This is exactly why people say, particularly with crypto, never invest more than you're prepared to lose. It's not an adage that comes from nowhere. It's an adage that actually comes based off of the past market cycles. Let's also look at some of the big bear bull runs, right? Which I think the main one was 2017 was the first big mass crypto bull run where prices all went up and Bitcoin crashed 20,000 or crossed 20,000 and Ethereum crossed 1,000, only for the market to crash out, lose 90% of its value again in 2018, right? This is a known phenomenon that actually has been documented as key as actually advancing innovation and progress and adoption within the crypto space, right? And it's not just me who's saying that bear markets are for builders. It's people who are paid more and smarter than me, like from Andreessen Horowitz, that just came out with a report that said crypto boom and busts are actually key to advancing the space. It's called a cycle of innovation. It's what provides the opportunity for basically builders to stress test their product market fit, introduce them to new markets, and be ready to go by the next time the market charges up again. So with that in mind, I actually think what we're living through today in 2022, it's distinctly different and more optimistic than past market crashes as recent as 2018, or even as recent as what happened during the COVID 2020 collapse. Why? Because there are all of the signs in place that show that crypto, Web3, blockchain, whatever the buzzword of the market category is today, has a tremendous amount of capital, and they're attracting a tremendous amount of talent. And this is actually the fundamentals of what's required to build great products for users, right? And so I think that on the whole, once we get out of this context of, oh my God, I lost the wealth of my portfolio, but rather to recognize that this is actually part and parcel of building a new category and part and parcel of driving adoption of the asset class, it becomes a little bit less scary, if you will, in terms of the context. I think one other thing that I'd like to add is that there's also, just one other thought is like DeFi came out of the bear market, right? So decentralized finance, what we see today, the billions and billions of dollars in capital that are now in money market protocols or in lending protocols and DeFi. These are companies that were founded, invented, built in 2018, so that by 2020, 2021, 2022, there were products and services that actually resulted in millions of users using decentralized finance, opening a MetaMask, doing things like buying ETH, being in a position where all of the rails finally existed for people to buy ETH on a credit card and buy an NFT on OpenSea and all of this. In 2018, none of that existed, right?
Yeah.
So I think as soon as we cross that chasm, it makes everything a little less scary, if you will. And there are lots of signals, I think corporate signals that show we have reasons to be optimistic about the technology, which we can get into.
Yeah, and I'd say, probably Callie's probably come up with a new terminology is like, it's not necessity that's the mother of invention alone, but it's crisis that's the mother of invention, right? And so out of crisis comes these innovations. And, I think I saw a chat about like, is this a speculative space? And I would say, one of the things I try to encourage people to think about any kind of investment or technology is to not come at it with a binary frame of mind. Because if you come at it from a binary frame of mind, I guarantee you'll only listen to the fear, crazy person side of your voice. So it's not about whether it's speculative or a guaranteed instrument. It depends on your time horizon. It depends on your risk appetite, right? And so based on those time horizons and risk appetites and all these other inputs that you find out, as Callie said, sort of what's your truth, what's your why, then you figure out how to calibrate your entry point. Maybe your entry point is 5% of what I'm comfortable with because we've recalibrated our whys, right? So the one thing I would just encourage everybody to do is like, don't think in binary terms when it comes to investing. Think in nuance and do what we just talked about here, right? Context, bite size, learn by doing, etc. All these things that get you into being and investing as a habit for life rather than being jerked around by what volatility does for you. So with that, I want to now, sorry, go ahead, Callie.
Oh, you just made me think of something that somebody very wise said to me. One of my behavioral psychologist expert friends, he was way more big brain than I am. But he said, speculation, you're speculating when you have bravado instead of confidence. And that hit me in the chest. I mean, think about it. It's like, if you're stepping out there and saying, I can do this, watch me do this in a almost like cocky way, like watch me make this money, then to a certain extent, confidence is good. But when you cross that chasm and when you forget your why, that's when you flip into speculation. So for me, I totally agree, Lule. Like it's thought of as a binary thing, but that shouldn't shut you off from exploring it because it really is like a wealth building tool. Investing is a wealth building tool as long as you approach it the correct way.
Absolutely. So now let's shift. So thanks for giving us some demographic context, some context in terms of how to think about the current environment. Now I want to pick your brain on how you see the future. And I'm not talking about guaranteed future, right? But just as, as intelligent people who live and breathe this every day, you have a point of view about what to think about the future, how to examine what the future could hold for us, right? So I'll start with Anna this time in terms of what do you see give us some concrete examples as well as where you think the arc of this goes in the next few years, knowing full well that there may be an interim period where we are going to still have a bumpy ride. What does it look beyond that in terms of both what the promise of the technology is, as well as what else it occupies, either as an investment, a store of asset, or anything else that it does?
Sure. So I think I'm going to divide this section into actually crypto investors and crypto users, if you will, because I think both are key to the future. As I mentioned, I think that, we've talked about this from the beginning, crypto is one way that you can add a high risk, asset to your portfolio. I think we are going to continue to see as more and more Zoomers, millennials, Gen X continue to move into the market. I think crypto is going to continue to occupy a place of being essentially one part of your portfolio, a high risk, high reward portfolio. I think we're going to see as we've continued to see financial advisors get smarter about this, to have to be able to serve people who ask questions about this, I think that it's, crypto as an asset that you hold in your portfolio, it's going to no longer be remarkable. I think it's going to become a standard, if you will. And I actually think that we're going to see that shift happen really over the next 5 years, if you will. Now, where I think things get really interesting is when we think of blockchain technology as a transformative technology, if you will, where we actually are going to build new applications that enable us to do new things based off of the blockchain infrastructure. And this is something that's happening today. And again, it's already happening today in the form of, like, let's say decentralized finance is an example of where now credit is key to building wealth. Now, for the first time, through DeFi standards and DeFi applications, someone doesn't have to go to a bank and doesn't have to go to a bank. They don't have to go through the process of being personally evaluated to see if they are a good candidate for a loan, but rather you just depose collateral in a smart contract. I have the money to take this loan. I'm executing the loan automatically, and I'm going to repay it automatically through a smart contract. So that's something that exists today, which we know is a superior, more accessible system for people to be evaluated based for credit and their credit worthiness than the process of banks today, which we know is flawed with manual error, right? And bias. Now, the challenge is that how do we make it so that those products are really easy to use, so that my grandmother can use it, so that my dad can use it, so that I don't have to be a computer scientist or a financial engineer to feel comfortable taking the loan. But that will happen. When we expand outside of financial use cases, this is where blockchain becomes even more interesting, I think, because this is where we get to understand really like the benefits of a Web3 world versus a Web2 world, right? And people always talk about Web2 as being this iteration of the internet, the social media rise, where as users, we were able to read and write on the internet in order to communicate and share information. Web3 is being categorized as the ability to read, write, and own. And I think social media actually provides one of the best examples of this. So and there's a bunch of really exciting companies that are working in this space right now. One that I'll name some examples in a second, but I think we can all understand this concept that when you post, Callie, for example, when she posts on Twitter, she has value in her Twitter profile. She's delivering content. She has a track record. Now, Callie doesn't actually own any of that content whatsoever. She can't take it with her. She can't transport it, export it, move it to a blog, etc. Ladies get paid. They have all sorts of content channels. They're renting. They don't own. They don't buy that. They don't own that content. They're renting space from YouTube, from Facebook, from Instagram, from Twitter, etc. And what we see now is that blockchain actually provides infrastructure where we can iterate on that model and provide better solutions, better applications for people using social media, where you actually could say, own all of your own tweets, or protocols where developers then can not just develop one Twitter with one algorithm, but actually can develop a flexible Twitter that can generate multiple sorts of algorithms. So whether I'm in the mood to see content that's about women empowerment, that could be a drop down that I would select. Or if I'm in the mood to see content about outrage content, right? Which I think is the default algorithm on Twitter today. Anyway, I could select that, right? So I think when we start to look at the application layer and what this means in terms of additional services, not just decentralized social media, there's a lot of efforts out there in terms of decentralized media, using decentralization in networks of trust to validate disinformation. Lots of examples of blockchain validating personal data, such as health records, identity, land ownership, verified asset ownership, etc. This is where it's hard not to be bullish on the technology, because as individuals, we all understand that we want these things, right? We want these things. We want our medical records owned by us and in a unified place. We want verified voting system. We want decentralized ID. We want these things because it will make our lives better, safer, easier. And I think this is the area where it's hard to fight that. And every other big company in the world sees that potential and is making moves in this direction as well.
Yeah, I love that, Anna. One, because I feel like so much of what we hear about crypto is just about the investing piece, which then gets you back into that binary speculation or investing conversation, which is not as helpful, as I said, unless you put it in context. But the second is like, it gives you a rationale if you believe this why, right? The why behind all of this. And I think it's incredibly helpful for you to unpack that. Let me ask you one thing before I shift it to Callie to give us her view of the future. One of the examples you used was, the ability to go to a bank and it's your personal information that governs it rather than some random bureaucratic process that makes the decision, if you will, the algorithmic decision on something. As a woman who's also been in the equity, creating equity side of the equation in your career, how do you think about this industry ensuring that it's not bringing the baggage of all the biases that are already baked into all the algorithms that exist around how credit can keep people out, right? How bad credit is, as we know, part of the systemic racism aspect of things, right? Like, do you think that this technology can be wary, but also be proactive in engineering it in a way that doesn't exacerbate further inequalities in our society?
So it's a great question. And I think a lot of it relies off of who's building what products and how are they being built, right? I myself have I'm more optimistic today than I ever was several years ago, because I know there's more women, people of color, gender diversity of all sorts, people who are working and building in the space. I will tell you that when I started working in crypto in 2017, that was not the case. It was pretty much all developers. It was all engineers, all, white dudes get a bad rap, but that's what there were, right? That's who was there. And in addition to that, not just white dudes, but the most technologically savvy and people who have money to burn in order to make more money and invest and reap all the rewards, right? However, I think that first and foremost, that's changing, right? It's changing every day. And I don't think it's an accident as to why it's changing. It's changing because the way crypto is built is inherently decentralized, right? It's because it's first and foremost, it's fully and totally global. The vast majority of these companies, protocols, DAOs are global from day one, right? You can work there, you can find a way to contribute no matter where in the world you are. Second of all, the idea of community building and bottom up actually creates a situation where individuals realize that they can add value in places where they otherwise wouldn't get jobs. Okay. Mm-hmm. This is a really critical thing to understand here, which is that there are ways, because of the way decentralized autonomous organizations are structured, that there are ways that people who like the community can contribute to the community and add value and potentially make money, even though this is a company that they might never work with, right? or never work for as a formal employee. So I'm really encouraged by all of the young people that I see from around the world, from markets, let's say, that it's in the past, it's been very hard to hire, let's say, Nigerian teenagers or hire Venezuelan cab drivers or all of these things. Through a DAO structure, there are ways for DAOs to create opportunities immediately, transparently, et cetera, for people who actually bring those solutions to their communities. And so I think this is a fundamental difference from how we used to build businesses, which was based out of Silicon Valley VCs.
Yeah. And so I want to just marinate on that, folks, because it's really important what we just heard. So one is, representation matters. So we all need to haul our behinds and get into the space and intellectually understand it to engage in it, because this is where the future is going. So it can either leave us behind, or we can be, as Anna called it, the engineers inside, right? And the builders are, if the more representations there in the builder, the more whatever is made is going to be more reflective of that equity that we want, right? The second thing that I heard, which is really important, is this too, which is that ultimately, if we do not continue to break normal, which is what this space does, it breaks normal constantly, it breaks the status quo. There's no way for people on the outside to get on the inside. So one of the reasons I get very weary when we talk just fear language when it comes to digital assets is essentially what we're saying is it's a vote for status quo. And we know status quo doesn't change a single thing. So we have to be savvy navigators of the information, of yes, the scary stuff, but to not abandon ship, to be a part of this game. So there is representation and engagement from everywhere under the sun. So thank you, Anna, for that. Now I'm going to focus on Callie's commentary here. And by the way, speaker, how long do we have? We have about how many more minutes? Somebody tell me in the chat. Time check. Yay, 11 minutes. Okay. So Callie,
if you have 11 minutes, then I'm gonna interrupt to add one thing to what you said.
Okay.
If we have 11 minutes, which is that builders don't have to be software engineers. We're all builders. We all have the capability to help build in this space. And I think this is a really, really important thing for everyone who's at this conference to understand, which is that in order to contribute and add value in a crypto community, or to participate in a DAO, or to go work at one of these companies, you do not need to be a developer or a software engineer to add value. In fact, probably better that you're not, because the big muscle that's really missing here is the ability to actually educate people, communicate, build community, storytell, etc. So this is just if I say it once during our entire session, there is a space in crypto, in Web3, in fintech for you, hard stop.
Yes. And I would also say that it is as essential to be a builder as it is to be an investor. Because to be an investor is a psychological shift in anything you end up owning, you have a different psychological aspect to it. So it's a yin and yang that we're talking to you about today, both investing and being a part of this technology as a builder and a community member. So on the investing side, Callie, give us a sense of, again, navigating the future. What is it that this space can learn from the moment we're in and then going forward, what it could be?
Yeah, wow. Well, first of all, that was a really hard act to follow, man. Y'all dropped the mic there and I have to pick it back up. No, but really, so investing outside of crypto, I mean, I echo everything Anna and Lule said here. Ownership is so, so important. And if you take that theme and apply it to traditional finance, you're seeing some of the same evolution happening. I mean, just think back at the stock market over the past 2 years. We saw the meme stock revolution. We're seeing big tech companies endure is not the right word, but look at splitting their stock, which stock splits are not normal, people. That's like something we saw back in the 1990s. We're getting back to stock splits. We're getting back to direct access IPOs. I mean, IPOs are when companies go public. That used to be something exclusively for Wall Street, exclusively for bankers to get in, before the shares hit the market. And then we all, individual investors, could buy them. We really are seeing a shift in ownership in traditional investing as well. And I think that that's a reflection of retail, or Wall Street really focusing on retail, understanding the power that we have in the market right now. And social media plays into this as well. Network effects play into that as well. I mean, it's so much easier to get engaged in the markets, stay abreast of what's happening, just because news is everywhere. Information disseminates quicker than ever. I mean, you can even watch, I'm a Federal Reserve nerd, so maybe this is nerdy of me, but you can even watch Fed Chair Jay Powell, his press conferences on YouTube. So we're all kind of meshing together, and Wall Street is, quickly realizing that now, because they know that they'll fall behind if they don't. So it really is an encouraging story, even if it's not the high growth, emerging market story that you hear in crypto. And it's an opportunity for us too. It's an opportunity for us to say, we are going to invest on these terms and you will follow them. And it all goes back to ownership. It's you as an investor realizing that means that you have, a say in where your companies and where your funds go. And you're having an increasingly greater say because Wall Street is recognizing the retail crowd even more. I think it's really exciting, especially because, I sit in the middle of a historical market that has had all these ebbs and flows and transformations. And, we can see even more down the road, and then the integration of crypto as well.
Fantastic. So what I thought we could do is take a few of the questions from the audience. I'm not sure I caught all of them, so I'm going to ask for your forgiveness and perhaps typing it back in again. But ultimately, I want to make sure that we have a few questions from the audience in terms of what kind of questions they have of you two or any of us. So until they warm up, ooh, look at that one. That's a big one. Okay, so I feel like there is a significant barrier to entry with crypto investing. Which platforms are trustworthy? That's the first question. Anna, you want to take that?
Sure. So, fortunately, I think there are a number of places to get started in crypto that are known brands with trusted track records, right? I'm not supposed to promote eToro outright, but I think eToro is one example of a company like that, as long as many others, right? There are different ways to get started on your crypto journey, if you will. And for most people, what makes the most sense is starting buying crypto and holding it at a decentralized exchange, which custodies it for you. For most people, this is actually the best option. If you're here in the US, there are a range of trusted options for you to get started with. One of the things that I liked about eToro is that actually, because of the copy trader approach, you can actually buy your own crypto, but then develop a portfolio that enables you to build a fake portfolio of riskier assets and begin to watch and track those. I can speak for myself. In that own portfolio, I've made and lost a lot of money many times, if you will, in my fake portfolio of things that I don't actually own. But it's fun for me to follow along. It allows for me to learn about crypto and tokens that I otherwise don't have the risk tolerance myself personally to actually buy into. But those are my tips for getting started. The other tip that I would say is start with, talk to who you know who has crypto, right? Like, talk to the people that you know that have crypto, whether it's your friends, your community, etc. Get their opinion on what's trusted. Get their opinion on what they've done. Participate in discourse of communities like this and ask other people what they've done to get started. There are a number of best practices now, so that you're not just forging it alone, and a bunch of solutions that will support that.
Yeah. So I saw one question about, like, if I have student debt, and I'm going to sort of replace that with any kind of debt, frankly, right? Because unless we are all born with a silver spoon in our mouths, debt has been a part of our equation at least since 1974. And so ultimately, the one thing I would say to you guys on that is this: the time to invest is always now.
Yeah.
It just depends what amount, but the time to invest is always now. And the reason is because time is your friend when it comes to investing. The second thing that's your friend is tax deferred instruments like your 401k and your IRAs and your 529s if you have a kid or a future kid. Because, fun fact, you could actually establish a 529 for anticipation of a future kid. Or for that matter, if you don't want to have a kid, I don't know, maybe you can use it in your retirement to do that cooking visit to Italy for education. I have no idea. But ultimately, there's time, and then there's tax deferred instruments. And every time you forfeit on time, it means you're forfeiting on tax deferred instruments. So what I would say to you is what changes if you have debt is how much you put aside. But the first no-brainer move is establish your 401k. Make sure, if you can afford to put in the match, put in up to your company match. The second is establish an IRA. Again, I don't care how much you put, $1 or whatever the case is, just the habit of establishing it. The third is establish either a savings plus a saving account and an investment account that you can play money, right, with. And again, even if no money is established in these places, the most important thing is you've seeded the infrastructure to become a lifetime investor. And so I will tell you this: the minute I realized that, and I started investing, because I didn't pay off my student loans way off into my 40s, right? The minute I realized that investing was key, it changed my psychological approach to what debt did to me. I suddenly didn't feel like I was always under it, that it was just another equation of my other elements of financial future. Now, I'm not trivializing the fact that student debt is a crushing thing in the US for so many people. I'm not trivializing that. I am proposing a different perspective though, right? Knowing full well that that's a reality. What if we became drivers of our financial destiny by adding a piece of investing in our world and what it we benefit from versus only being under debt? So that's the only sort of prism I would provide you. But with that, I want to make sure that we also have other questions that we can answer. Any thoughts, Callie, on in terms of being able to think about investing as an initial starting point? Like if I've never invested in capital markets before, how I should think about it?
Oh my gosh. Well, I stand everything you just said, Lule. I'll add to, make sure you know how your money works for you. Open a spreadsheet, write down each of the accounts you have, either debt or investing accounts, and understand what your investing account makes for you, what your checking account makes for you, what your savings account makes for you, and what your debt takes from you. What I mean from that is if your interest rate on debt is 5% annually, then think of that as like a negative 5% return. And don't ignore, the small opportunities here. Like Lule mentioned, company matching in your 401k. That's a 100% return, folks. If you put $50 into your 401k and your company matches all of it, that's 100% right there. That is something you should prioritize. I don't know your situation, but I think it's hard to say like that's not a priority. So that's kind of where Lule is coming from. Understand how your money works for you and understand where your interest rates sit when it comes to all these other priorities for your money. One thing that really helped me in terms of, feeling comfortable enough to invest. And again, I've worked in Wall Street pretty much my whole career, and I didn't start investing outside of my 401k until 5 years ago, which I'm ashamed to say, but it is what it is. We're all still figuring it out. One thing that really helped me was to understand my relationship with money, understand my emotional attachments to money, because I grew up in like a lower middle class household. And as I became an adult, as I understood, how I viewed money, I figured out that I operated from a scarcity mindset. And just knowing that was really empowering. It took a lot of therapy visits. It took a lot of soul searching, and I'm not there yet, but knowing that really helped me shine a light on just how exactly I was viewing money and, how I could really optimize my budget for my life and for, my emotions and my habits. And it made me feel better about letting go a little bit of money and, putting it out into the ether and taking a little bit of risk with it. So I know it sounds really squishy, but just there's a lot of emotional connection to money, and understanding it will, empower you to do better things with your money.
Yeah. And we heard a few commentary in the chat around sort of being burnt, whether it's through, bad financial advice or bad actors. And of course, we are not advocating to check your wisdom at the door when you come into this space, right? And even with your own wisdom, bad things can happen, right? And that's why good regulation, smart regulation, and accountability is important in our industry to make sure that people are playing on a fair level field with people who are newer to investing. So we feel your pain, and we hope that, one of the ways that sort of the ways to protect ourselves around that, and I'm going to leave you with these thoughts, everybody, and then you guys can leave some thoughts for everybody, and then we can wrap it up, is this. One, as we said, is we hope we provided you with a little bit of that sort of understanding that the needle has been moved. Do not think that the needle hasn't been moved, and you can move that needle a little further in your lifetime, both for yourself and others. So that's why we wanted to share that demographic reality to you. The second is, context matters. Context. And context is the antidote to thinking binarily around fear versus wanting guarantees out of life, which there are none, right? So context matters, and consume that context, whether it's you follow these two ladies who have amazing posts all the time, or you get your information from somewhere else. Get the context for the environment that we live through, especially now. And then the third thing we talked about is the possibilities, right? Because if we don't have a blue sky mentality around what this could mean, we won't get out of bed. And it's important for us to understand that blue sky mentality, because that is what's going to get us engaged in being a part of the future as representatives rather than just consumers, right, of this picture. And we know that consumers alone is not what we want to be. We want to be part of the makers crowd, right? So that's going to be important to keep blue skying. And then lastly, may you ever be an investor and a maker, because that's exactly what we need to be. We need to be on both sides of the equation. So I want to leave you with those thoughts. And Callie and Anna, maybe you can leave some thoughts for our audience, and we can say bye-bye.
All right, I'll jump in. I mean, y'all are crushing it. We're talking about investing. That's more than like 90% of people do. It's been such an honor to talk with you all about, the power of investing and all of our backgrounds. Just, stay engaged, keep working at it. You've got this. We're all going to make it.
Yeah. I just wanted to, something Callie was talking about in terms of her own journey and overcoming her own insecurities really spoke to me in terms of it's really easy to feel like everyone else is making more money than you and therefore be really discouraged and everyone got rich already and why haven't I done it? And it's a reflection of my own weaknesses, my own, insecurities. Why not me? Why not me? Right. And I think to Lule's earlier point about like, you got to be in the arena, right? There's no winning if you're not in the arena. And so I think one of the reflections that I could leave you guys with is that even though that insecurity, that feeling of not having done enough, or if only I had invested 2 years ago, 3 years ago, more money, whatever, let your haters be your motivators, if you will, and let that, rather than just eating you up, use that as your motivation of trying to learn in terms of like, well, I was afraid back then, but the way I'm going to deal with that fear is take $30, or the way I'm going to deal with that fear is open up a practice account, or the way that I'm going to deal with that fear in that anxiety is to, commit an hour of my weekend to learning about NFTs so I don't feel like I'm getting left behind, right? So I think that it's all too easy to feel like it's too late. We didn't start. Everyone already made their money. All the boys are getting rich without me. We all feel it. It's totally natural. It's totally normal. But don't let that keep you from getting started.